बिस्मिल्लाहिर्रहमानिर्रहीम। मेरा नाम अलियार अली है और मैं BS टूरिज़म फिफ्थ सेमेस्टर से हूँ। जो आज का हमारा जो टॉपिक है वो इंट्रोडक्शन टू अकाउंटिंग एंड फाइनेंस है। जो डिफिनेशन ऑफ अकाउंटिंग, द प्रोसेस ऑफ रिकॉर्डिंग, समराइजिंग एंड एनालाइजिंग फाइनेंशियल ट्रांजैक्शन। यानी अकाउंटिंग है, इसमें हम जो फाइनेंशियल ट्रांजैक्शन है उनको रिकॉर्ड करते हैं, समराइज करते हैं और एनालाइज करते हैं। और जो टाइप्स ऑफ अकाउंटिंग है वो है फाइनेंशियल अकाउंटिंग, फोकस ऑन एक्सटर्नल रिपोर्टिंग टू द स्टेक होल्डर्स, एग्जाम्पल इन्वेस्टर्स और रेगुलेटर्स। मैनेजरियल अकाउंटिंग है, फोकस ऑन इंटरनल रिपोर्टिंग फॉर डिसीजन मेकिंग एंड परफॉर्मेंस एवोल्यूशन। रोल ऑफ फाइनेंशियल अकाउंटिंग, फाइनेंशियल अकाउंटिंग फोकस preparation of financial statement for external users, example income statement, balance sheet, cash flow statement. Ensure compliance with accounting standards, example GAAP or IFRS. Primary goal, provide an accurate picture of company's financial health to external parties such as investors, creditors and regulators. The role of managerial accounting. Managerial accounting focuses provide detailed financial and non-financial information to help managers make informed decisions, include budget report, cost analysis and performance evaluation. Primary goal, assets in internal decision making process for planning, controlling and improving operational efficiency. The interrelationship between finance, accounting and decision making. Finance focuses on managing financial resources, raising capital and making long-term investment decisions. Accounting provide financial data through accurate reports, financial and managerial accounting. And जो third point है वो decision making. Finance and accounting work together to help businesses make informed financial decisions regarding operations, investing and risk management. Key concept and financial statements. Key financial statements, income statement show profitability or a specific period. दूसरा है बैलेंस शीट, provide a snapshot of company's financial position at a point in time. Cash flow statement है, track cash inflow and outflow from operating, investing and financing activities. Relationship to decision making. These financial statements are used by both financial and managerial accounting to inform critical business decisions. और जो हमारा सेकंड टॉपिक है बेसिक फाइनेंशियल स्टेटमेंट्स. Introduction to financial statement. Type of financial statement. Income statement show company's revenue, expense and profit over a period. Balance sheet provide a snapshot of company's assets, liabilities and equity at a specific point in time. Cash flow statement track cash inflows and outflows from operating, investing and financing activities. The income statement purpose show the company's profitability over a period, quarterly or annually. Key components are revenue, total income generated from sales or other businesses activities. Or expense, cost incurred to generate revenue, cost of goods sold, operating expenses. Net income, the difference between total revenue and total expense indicates the company profit or loss. Balance sheet है, purpose है provide a snapshot of a company's financial position at a given point in time. और ये इसकी key components है. Assets, what the company owns, example cash, inventory, property वगैरह. Liabilities है, what the company owns, loans है, accounts है और अकाउंट्स पेएबल वगैरह है। एबिलिटी से जो लोन्स वगैरह कंपनी जो पे करना होता है। इक्विटी है द रेजिडेंशियल interest in the company after liabilities are subtracted from assets. Example: common stock, retained earning. The cash flow statement purpose है provide information about the company's cash flows and cash inflows and outflows over a period. Key components है operating activities, cash flow from the company or businesses operations. Investing activities, cash flow related to acquisition and disposal of long-term assets. Financial activity, financing activities, cash flow related to borrowing or and repaying debt or issuing equity. Importance: help assess the company liquidity and ability to meet short-term obligations. The accounting cycle overview of accounting cycle. The accounting cycle refers to the process of recording and processing financial transactions. Key step in the cycle: transaction occurrence. Financial transactions are initiated. Journal entries. Recording transaction in journals. Posting the ledger. Transfer journal entries to the journal ledger. Trial balance, ensuring the debits and credits are balanced. Adjusting entries. Adjusting for accrued revenue and expenses. Financial statement preparation, generating financial statement, closing the books, preparing for the next account period. और जो चैप्टर 3 है, द अकाउंटिंग साइकिल, कैप्चरिंग इकोनॉमिक इवेंट्स. Introduction to financial statement analysis. Purpose of financial statement analysis. Purpose of financial statement analysis. Assets, a company performance and financial health. Help internal and external stockholders make informed decisions. Example: investor, creditors, managers. Common tools for the analysis. Ratio analysis, using financial ratios to evaluate a company's performance. Trend analysis, analyzing financial data over time to identify patterns. और जो कॉमन साइज स्टेटमेंट्स, कंपेयरिंग फाइनेंशियल डेटा एज अ परसेंटेज ऑफ टोटल रेवेन्यू और टोटल एसेट्स. की फाइनेंशियल रेशियोज. लिक्विडिटी रेशियो, measuring a company ability to meet strong term obligations. Example: current ratio is equal to current assets or current liabilities. Profitability ratio, measuring a company ability to generate profit relative to its revenue, assets or equity. Example: net profit margin is equal to net income or revenue. Solvency ratio, measuring a company's ability to meet its long-term obligations. Example: debt to equity ratio is equal to total ratio or total equity. Efficiency ratio, measure how well a company utilizes its assets. Example: assets turnover ratio or sales or average total assets. Trend analysis. Purpose: compare financial performance over time to identify trends, help in forecasting and understanding past performances. How to perform: analyze data from multiple periods, typically in year or over year comparisons. Look for patterns such as increasing, decreasing revenue, cost or profitability. Example: analyzing the trend in net income over the past 5 years to gauge the company's growth. Common size financial statements. Definition: a financial statement where each line item is expressed as percentage or a base amount. Example: revenue or total assets. Purpose: simplifies comparisons between companies or different size or between periods. Example: On an income statement, each expense is shown as percentage of total revenue. On a balance sheet, each asset is shown as percentage of total assets. Cost volume profit CVP analysis. Purpose of the CVP, a tool to understand the relationship between cost, sales volume, and profitability. Helps business determine the break-even point and impact of change in sales cost and volume. Key components: fixed costs that do not change with the level of production or sales. Variable costs that change with the level of production or sales. Break-even point, the sales level at which total revenue equal total cost, no profit or no loss. Formula: break-even point in units is equal to fixed cost or selling per unit minus variable costs per unit. जो फोर्थ चैप्टर है वो एक्रूअल एंड डिफरेंस. Definition: cost behavior refers to how costs change in response to change in business activity levels. Type of cost: fixed costs that do not change with the level of production or sales. Example: rent, salaries. Variable costs that change directly with the level of production or sales. Example: raw material, direct labor. Mixed costs that have both fixed and variable components. Example: utilities. Definition: the relevant range is the level of activity within which the cost behavior assumptions, fixed, variable, mixed, are valid. Key point: the outside relevant range, fixed and variable cost patterns may change. Higher volume might require additional equipment, changing fixed cost. Importance: understanding the relevant range helps in budgeting and forecasting, ensuring accurate cost projection for different production levels. Breakdown even analysis. Purpose: break-even analysis helps business determine the sales level at which total revenue equal total cost, no loss or no profit. Key components: fixed costs that stay constant regardless of the production level. Variable costs that vary with the level of production or sales. Selling price, the price at which a product is sold. Break-even formula: break-even point in units is equal to fixed cost selling price per unit minus variable cost per unit. Usefulness: help in decision making, price, and understanding the impact of change of profitability. Budget and forecasting. Definition of budgeting: the process of creating a detailed financial plan that outlines expected revenues and expenditure over a specific period. Type of budget: operating budget focuses on day-to-day operation including revenues, expenses, and profit. Cash budget focuses on expected cash inflow and outflow, helping ensure liquidity. Capital budget focuses on long-term investments in assets. Importance of budgeting: provide a framework for financial planning, help in controlling costs, and supports performance evaluation. और जो लास्ट चैप्टर है वो रिपोर्टिंग फाइनेंशियल रिजल्ट्स. Definition introduction to cost allocation. Cost allocation is the process of assigning indirect costs, overhead to cost objects such as products, departments, or projects. Why cost allocation is important: ensuring accurate product costing, help in pricing decision, cost control, and performance evaluation. Type of cost to allocate. Direct cost. Cost directly attributes to product of service, raw materials, samples. Indirect costs, overhead costs that cannot be traced directly to a specific product, utilities, administrative salaries. Traditional costing method overview. Traditional costing method assigns overhead costs to products using single cost drivers such as a labor hours or a machine hour. Common traditional methods plan-wide allocation over once overhead rate for the entire company. Departmental allocation overhead costs are allocated to different departments based on specific cost drivers. Limitations may not accurately assign overhead to products that consume resources differently. Limitations are may not accurately assign overhead to products that consume resources differently. Uh, can distort products costs leading to pricing and decision making. Overview. Activity based costing, ABC. ABC is a more refined method of cost allocation that assigns overhead based on the activities that drive cost. Key components of ABC are activities, tasks or operations that consume resources, setting up a machinery, inspecting products, cost drives, factors that cause the cost of activities to occur. Examples: number of machine setups, inspection hours, mm, cost pools, group of related costs that are accumulated and assigned to costs based on their usage of activities. And the advantages of ABC are more accurate allocation of overheads, especially for companies with diverse products and services. Help identify non-value added activities and inefficiencies. Cost allocation in pricing decision. Cost plus pricing method where our fixed percentage markup is added to cost of pricing of producing a product to determine its selling price. Importance of accurate cost allocation in pricing, ensuring that all costs, both direct and indirect costs, are covered, preventing losses. Help to competitive and profitable prices. Challenges: over under allocation of costs can lead to inaccurate pricing. ABCs can improve pricing accuracy by reflecting the true cost of of producing each product. हम्म, तो थैंक यू, यहाँ तक थी मेरी प्रेजेंटेशन।